Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market set another all-time high and for the most part has been balancing above yesterday's high of day. At this point, heading into the open, our intermediate and bigger picture bias continues to be bullish. We do technically still have bullish time frame alignment, but at the same time, the market has hit the 100% range extension of the balance area that it broke out from. So recently the market broke out from the 2485 to 2507 quarter balance area or trading range, and 2529.5 marks the 100% extension of that balance area. Now that doesn't mean that 29.5 is hard resistance, but it tells you that within a matter of just 2 to 3 days, the market has put in a pretty decent upside move, and even if we put in another continuation move higher, the upside potential could be limited to the 34.75 to 36.75 zone. Now technically beyond 28 to 30 there is no hard resistance, but based on the range expectation, in the event that we get a successful breakout continuation, there would be potential to reach 34.75 to 36.75, and then 41.75 to 43.75 is a range extreme, and there is a lower probability of the market going all the way up into 41.75 to 43.75. So in the event that we get a breakout continuation move, 34.75 to 36.75 would be the more likely target. But in order to get that upside breakout continuation move, we need to see continued broad market strength and sustained upside momentum. And given that we're trading at the all-time highs, a lack of strength and a lack of upward momentum could easily bring ES down into the pre-market support zone at 23.5 to 25.5, which is the most aggressive area of support. Now in terms of going long at the 23.5 to 25.5 pre-market support, we need to understand that it is the most aggressive area of support, and it's only going to make sense to enter long there if in real time we're not seeing any big warning signs, if we're not heading down there after swiftly rejecting 28 to 30 and heading down on stronger downside momentum. So essentially, it's only going to make sense to go long at pre-market support if the real-time conditions still support the idea of a breakout beyond 28 to 30. So if we're heading down to pre-market support and we're seeing a lot of weakness in real time or a lot of downside momentum that could limit the upside on the day, then we need to be careful at 23.5 to 25.5. So anytime we're taking a trade, we need to make sure that the reward to risk is really there to justify the trade setup. So at pre-market support, that's the question to ask. Do we have enough reward to risk given how the market approaches that zone and what the real-time situation looks like? Below pre-market support, we have some support around 25.20 and then the initial support zone at 14.75 to 17.75. Given that the intermediate and bigger picture bias is bullish, in the event that we get exhausted into initial support, that would be an area where responsive buyers could defend, and it's a high probability spot for a bounce. Below that, we have support at 12.75, and then finally 08.75 to 10.75 marks the balance breakout area, so that's a very high odd spot for buyers to be active. Ideally, the market doesn't go all the way down there, but in the event that it does, that would be a high probability zone for buyers to be active. So again, heading into the open, the intermediate and bigger picture bias is bullish, and even on the smaller time frame, the buy side is still in control. So we still have that bullish time frame alignment. We just need to balance that with the idea that the market has now hit the 100% range extension of the balance that it broke out from, and that could limit the upside to 34.75 to 36.75. Now if off the open we're seeing broad market strength, sustained upside momentum, then the market is at all-time highs and there's no hard resistance above here, so we could continue going higher, but we just need to see continued strength and continued momentum in order to continue going higher from here. So we just have to be a little bit more cautious simply because the reward potential could be limited. So those are the main ideas heading into the open. Let's see if the buy side can maintain this firm control, and we'll take it from there.